Hey everybody, welcome to another Mortgage Fundamentals podcast. I am here with my buddy Asael, a real estate agent here in Las Vegas, ready to help me educate you guys on some of the most common mistakes made by home buyers before they go into the home buying process. Now, without further ado, how are you doing, Asael?
I'm doing very well, Daniel. Thank you so much for having me with you today. I see this as a great opportunity for us to definitely educate our public,
Mm-hmm.
and I'm really excited about going over the topics that we are going to be going over today,
Mm-hmm.
because I do think that it's very important. So, just excited to be here. So, thank you so much for having me.
Oh no, thanks, man, for coming by. I know today, like I mentioned, we're going to be talking a bit about some of the common mistakes that home buyers or future home buyers make before they purchase a home. I know we have some personal experience on some of these.
Absolutely.
Maybe me a lot more stuff to deal with a lot of people's loans, but it's just something that it's it's just a good topic to kind of make sure people don't listen to other people out there telling them that it's okay to do one thing and then all of a sudden it kind of ruins their ability to purchase a home.
I completely agree with you on that. Even though on the realtor side, we don't have to be completely well versed when it comes to the finances, it is very important to understand the loan process, to understand what it's going to take for our mutual clients to successfully get from point A to point B.
Mm-hmm.
And then, of course, making sure that they are getting the proper education from the professionals.
Yeah.
Because you are right about those stories that we hear where they're hearing from their family members or friends,
Yeah.
giving them suggestions
Yeah.
that don't actually benefit them. The
Mm-hmm.
best thing to do is always come to us first. If it's a question that I can't answer, I'm going to go ahead and revert it to you. And then from there,
Yeah.
we can definitely take it.
Yeah, I think it's always those, and you touched on a really good point right there. It's always those family members or those friends that bought a house like 20 years ago, 10 years ago, and they're like, no, that didn't mess me up, and I just did this and I did that, and I was just perfectly fine.
Agreed.
And people just get a lot of misinformation or pass out a lot of misinformation. And I've talked about this in like previous podcasts, regardless of the fact that we live in a world with a lot of technology. You know what I mean? With a lot
Yes.
of information available to us, people still make these mistakes on a regular basis. It's not uncommon.
And you're right about that. Now that we are information overload and they
Mm-hmm.
can go ahead and just research on their own, they might be researching an article that's outdated.
Yeah.
So that information no longer applies to our market today. And that's important for them to understand what are these sources and are they credible? Are they still valid? Is it current? And the only current that I can give someone with confidence is you and I. It's
Yeah.
the lender and it's the realtor. It's the ones that are seeing the market on a day to day basis. And as we always say in our industry, or just about any industry, we have to sometimes help somebody unlearn to relearn.
Mm-hmm.
And so they're going to come in with all of these myths, and they're going to come in with all this information that is it's outdated. And we're
Yep.
going to have to update them to what we're doing today.
Yeah, and that's the crazy thing about our industry, and like we're kind of going through something like that right now or similar, right?
Yes.
You guys, with the day we're recording this, it's the beginning of August. Um, and there have been some changes to your guys' contracts, how you guys talk to clients, and
Yes.
that's we're not going to get into detail about that, but that's kind of like an example as
Correct.
to how these industries regularly change, how we have to do business with our clients. Even for myself as a real estate or as a lender, sorry, I'm not the real estate agent. As a lender, on a regular basis, we have guidelines changing from one program to another.
Correct.
That's why it's always a good idea, or not a good idea, but it's always great when the lender actually keeps up with these things, because just because one thing is true for this program does not mean it's true
Yes.
for program B and C,
And I
you
can
know?
chime in on that, with the information from the realtor side.
Mm-hmm.
Some of us are qualified and well versed with the, down payment assistance programs or the programs to assist a buyer. And the
Mm-hmm.
qualifications are so important. You'll see maybe other realtors just generalizing it and
Yeah.
saying you can qualify for this and this is the amount. And the honest truth is maybe no,
Yeah.
maybe it's not actually what can happen.
Yep.
And it's unfair to the public to say, oh, I can, right? And then be told no. So it's more important for us to be the ones that stabilize that conversation so that way we're able to let them know that it's going to take a little bit more effort. We're going to have to ask them some questions and we're going to have to ask for their trust so that we can find out if they qualify and then take it step by step from there.
Yeah. And the questions could sometimes be a little uncomfortable for some
Hmm.
people, right?
Correct.
So it's our job to do two things, right? It's to ask the questions, but to make sure that the client understands why we're asking these
Yes.
questions. so they feel more comfortable, more confident as to, okay, there's an end to this, to the mean, or there's an end to this mean. I forgot that phrase. There's a reason for this. You know what I mean? So my point is, guys, just go ahead, ask your real estate agent for questions regarding real estate programs or real estate related questions. It's always okay to ask your lender about lender related questions. And real estate agents usually are really good about referring the lender questions over to
Absolutely.
a lender because you want to make sure you're getting the right information. So let's segue into our topic today. So, like we said, we're going to talk to you guys about the most common mistakes that we see when it comes to home buyers trying to purchase a home, and they've done something that now has either lowered their purchase
Yes.
price or purchase amount, or has completely put them out of the market because now they have to wait for certain reasons.
Correct.
You know, so the first one we'll talk into is taking on new debt. So this is a very common one.
Yes.
Clients tend to not think that they could. It has a lot of reasons why people probably do this beforehand. Some people may think, oh, it's not going to affect me, right? I can still buy a home if I purchase this car, or if I run up this credit card, or if I take out this personal loan. It shouldn't be a problem because they'll see that I have really great credit and really good income, and this shouldn't mean anything. And for some other buyers, they're not thinking that they're going to be purchasing a home anytime soon,
Right.
right? So they take on these debts, assuming that they're just going to be renting for some time.
Correct. And I agree with you on that. Uh, it is sometimes when the opportunity to become a homeowner comes your way, it's either, you're proactive and you're actually planning that.
Yep.
The majority of the public doesn't pre-plan. They trend it, which would be, they're starting to hear it in the news. They're starting to see the excitement. They're starting to see that, it's being spoken about, that this is the time. And that entices them to want to start looking. So they didn't prepare their budgeting. They didn't prepare, what it is to look at, debt to income ratio. They didn't prepare to, maybe they shouldn't open those store cards or those credit cards, or maybe they shouldn't have, leased or financed that vehicle. And once we come into their world, we start giving them the reality of what those actions are going to now provide consequences to.
Mm-hmm.
And sometimes they could have been a 100% well qualified candidate with zero debt, but at this time now we're working with those numbers.
Yeah.
If you can maybe discuss a little bit more about that.
Yeah. So the one thing you touched on, and if you guys want to learn more about like debt to income ratios, I do have another video on that from my podcast on last season. Go ahead and watch that video. It should give you a little bit more details to how that works. But yeah, so taking on new debt affects your debt to income ratios,
Yes.
right? So when you're trying to purchase a home, a bank has to look at a few things, and one of the main things is credit, but the other one is your debt to income ratio. So we're looking at what your total debts, including credit card payments, installment debts, housing payments, are compared to what you make on a monthly basis.
That's right.
Right? So if your debts are on the heavy side and you're trying to purchase a home, there's a good chance that you taking on all that debt could completely push you out of the market.
Mm-hmm.
Right. And then for some people who make a little bit more money, but they're trying to take on like a $1,000 truck payment for some reason, what it really does is diminish your buying power.
Absolutely.
Right. So you're coming to me and you're like, well, I make $100,000 a year, yada, yada, yada. And I understand that. And that's great. All kudos to you. You know what I mean? It's really good that you found a really good job. But what you've done by taking on these debts is you've pushed your expenses so far out of reach for you to purchase a home with regular financing, because we have to stay below like either 45% or 50% or even sometimes 55% of your total income.
Yes.
And those payments really do have, a big impact on what you can do.
Agreed. When we're talking about the debt to income ratio, which we, term it as DTI,
Mm-hmm.
is that if you start to see it more on a realistic level, you want to see that as, do you live with underneath your means, within your means, or above your means? It's really
Mm-hmm.
that, if your expenses are over exceeding what you bring in, you can cover them on a month to month. But if it's not leaving you much room to do any more, that's what we're working with.
Yep.
And, there are opportunities for you to lower those expenses or eliminate them altogether. It's just understanding, well, what are the proper steps that Daniel's going to be able to recommend and suggest, so that way it's beneficial to you, because not all stories are the same.
No, absolutely
Correct.
not. Not everybody's in the same boat, and not everybody has the same resources in order to either eliminate those debts, lower those debts, whatever the case may be. So, in what we're trying to say right here, I think the key thing is preventing us from having to deal with that,
Correct.
right?
100%.
So, if you're thinking about purchasing a home within the next 2, 3, even 4 years, you might want to reconsider making some of these purchases or getting yourself into these debts, because if we're talking car loans, what does the common car loan go for these days? 72 months now, 60 to 72 months, and
Yes.
people are doing it for 84 months,
Yes.
right? Even in 3 to 4 years, you're still going to have that debt. You know what I mean? So it's
Yep.
still going to impact you. And let's not even talk about just the debt that you're getting for yourself when you're financing, even co-signing,
Co-signing. Yes.
right?
Mm-hmm.
So I'll go back to the first one. So the first thing we were just talking about is taking on some debt. I had a client actually give me a call 2 weeks ago, and she told me that somebody in her family told her it's okay to purchase a home before you buy a house. So it's, like I said, it's not uncommon for other people to
Correct.
kind of push this, right?
Yes.
We also have another client right now who purchased a car, I think, not too long ago as well. And we've been trying to I've been trying to find different ways with the programs we have, and we've been working together to try to, see if there is anything we can do for her, but trying to find different ways to kind of help her push her pre-approval up a little, right?
Yes, and I'll chime in on that due to where sometimes we're discovering uh, past decisions that our clients have made. So these are decisions well before they met us.
Mm-hmm.
Sometimes they're not well advised decisions,
Yeah.
and of course, they're going to bring those consequences that we're going to be discovering.
Mm-hmm.
Where they probably thought that this is the vehicle that they wanted. It's the beautifulest car ever. It's the one on the lot, and they get, I guess you can say, convinced to buy that vehicle, but they just don't know what's going to happen, how they're going to be affected in the future.
Mm-hmm.
And then they realize that maybe it's not always what you want, it's what you need. And sometimes we're trying to find a common balance, something in the middle that says what you want and what you need can occur.
Mm-hmm.
But if you're always focusing on what you want and not exactly what you need, it might come back and bite you.
That's true. And when I'm talking about installment debts, like right now, we're specifically touching on car payments, right?
Mm-hmm.
Because that's the most common one. But installment debt could be any kind of installment debt. It could be a personal loan. It could be a secured loan. It could be a boat loan, motorcycle loan. It could be any loan that's on your credit that you have to make a monthly payment on. That is an installment loan, as long as it's tied to something, not a credit card, right? And then to the next point, co-signing.
Yes,
I understand that people want to help their family members,
that's what happens.
right? Or friends or whomever they're going to help
Yep,
out with the whole co-signing thing. But understand that co-signing means you're also responsible for that debt,
absolutely.
right? You're not co-signing and, oh yeah, I'm just helping them get into a loan. No, no, no. You are responsible for that debt. If that person defaults on that debt, your credit score is also going to be affected,
Yes.
right? It's going to be impacted negatively. And if you're one of those people that has really great credit and you're really meticulous about taking care of it, this could be the way for you to really screw that up. And having said that, that can also affect your ability to qualify for specific programs.
Correct.
So I highly advise not doing it if you are not willing to also take on the responsibility of having to pay for it if they're unable to.
I agree with you on that, Daniel.
Mm-hmm.
I know that the stories that we hear, from all aspects of life is that, oh, I'm just helping my family member. I'm helping my brother, my significant other,
Mm-hmm.
not married, or, a friend, a colleague, anyone. And then immediately they don't know that they just co-signed for the responsibility to pay that debt. So if the time comes where the other party just refuses or doesn't know how to, or they go through some hard times, and it's never a story we want to hear. We're
Mm-hmm.
not saying don't help your family, but you might want to interview your family member to make sure they're qualified as
Yeah.
well. We want to make sure that they understand their responsibilities
Yeah.
of one, well, why didn't they qualify on their own? Are they
Mm-hmm.
making not enough money? Is their credit that bad? Because you want to know what you're getting yourself into when it comes to co-signing.
Mm-hmm.
uh, I suggest do not co-sign because of the possibilities of something happening. The economy might tell you, you know what, you're out of a job.
Yep.
And if that happens, then you're going to now have to find out, well, it's an expense that it's a responsibility. It's a debt that you owe regardless if income's coming in or not. And of course, you might chime in on this one, Daniel, is that it's not only hindering my credit, but it's also hindering my DTI as well, isn't it?
Yeah. So you're responsible for that debt. So we have to include it in your debt to income ratios. So there are tricks around that. Once those people start making at least 12 payments and we can prove that, but you're gonna have to be able to get their bank statements, we can take it off. But what you've done here is essentially postponed,
Right.
right? Your ability to purchase a home anytime soon or the amount you might want to purchase anytime soon. And again, this is going to be based on what your income is. And I understand like if you have kids and all this other stuff, again, I highly advise against it. You're responsible for the debt. It's your choice. But if you're going to do it, make sure you're well off enough to take on the responsibility of the debt yourself.
100% agree.
You know what I mean?
Absolutely.
So co-signing is going to impact you before. So it's going to impact you if you're going to try to purchase a home. So if it's a good idea to maybe talk to a lender beforehand, just to
Yes.
see if it really is. Because I
Correct.
will say this too, because I have had clients where I'm in the middle of the process and they do want to co-sign for somebody, but their budget plus what that car payment was still going to be fine. But that's very rarely the case.
Agreed. You know, co-signing also does have its positives. Today we're
Mhm.
talking about the negatives,
Yeah.
but the positives are, it does, sometimes improve your credit. It
Hmm.
does sometimes, give established credit if you don't have any.
Hmm.
But in reality, we want to let everyone know that the stories that we predominantly hear are the ones that, come with the negatives. And we want to make sure that everyone is well educated moving forward to know that there is so many things that we have in control until it's out of our hands, and then it's really hard to kind of take a revert. It's hard to
Hmm.
reverse things once they're already in play.
Yep. Yeah. So it's easier. It's in this case, it's not easier to mess up now and ask for forgiveness later because that's not going to be the case here. But to kind of touch on a similar topic, but
Mhm.
even though this is not preventative, one of the things you want to also avoid is taking on some debt while you're in the process,
Absolutely.
right?
100% agree on that.
And not just installment loans, but we're talking like taking out credit cards for buying furniture.
Yes.
That's happened before, and then we do a soft pull at the end before closing, and we see that you guys decided to run your credit and open new debt. That can have an effect on whether you qualify or don't qualify, or us having to send it back to the underwriter and then postpone closing. And the other one is these are numbers I go over with you guys beforehand, but it doesn't mean still doesn't happen. Taking out a loan to cover your closing costs, or think you can take out a loan to even cover your down payment.
Yes, Daniel, that is something that I've heard through a third party. I
Mm-hmm.
was discussing with a colleague of mine who were currently under contract, so
Mm-hmm.
they were in escrow,
Mm-hmm.
and they were waiting for the funds to come in from the buyer, and the buyer was like, "Oh, don't worry, I'm going to have that down payment."
Mm-hmm.
And then you start to hear the details, and they were going to go ahead and uh, they were going to take money out of their line of credit to be able to fund their down payment. And my colleague didn't know how much of a red flag that was.
Mm-hmm.
And then they fell out of escrow. And there's certain things that we see,
Mm-hmm.
and we are kind of, taking back a little bit that some people really do believe that there's certain things they can do. And you start to wonder, well, where did that information come from?
Yeah.
And who did you speak with regarding that this is a good idea? Because it's going to, jeopardize your ability to become a homeowner. There's no, I could say, stronger feelings and emotional feelings than being excited of potentially becoming a homeowner and then being told at the very last moment that there was something that you potentially did that affected your closing, and now you have to start basically from ground one.
Yep.
So
It's true. It those things do happen, and that's why it's always a good idea to be very transparent with your loan officer or whomever's helping you with your financing about where the funds are coming from. We're
yes.
not asking these questions again. I think I mentioned this in last season a lot. I'm not asking you questions just to ask you questions. I hate asking questions. You know what I mean? Unless I'm just sitting there trying to chit chat, that's one thing. But I'm asking you questions because there's a rhyme and reason to everything, right? I
Yes.
need to know how you want to structure this, how we're going to structure it. If you want to do things a certain way, I need to know so I can structure it properly. Because if you are going to take money out of a line of credit, let me know way ahead in advance.
Yes.
I'll take that into consideration. We'll see how that could how that can help, or if it could even work. If it can't work, then we're gonna have to find a different way of doing it, and then we can work together, either within amongst ourselves. Maybe even the agent might know some possible different ways of doing things, but be very, very transparent about any financial changes you make to your credit and your
Agreed.
debts.
And so, what do you think, Daniel, when it comes to them having some accounts that they want to think that maybe by paying them off it'll help their qualifications? Well, let's say that they do pay off a debt.
Mm-hmm.
How long does it take for it to actually reflect?
Depends on the company and
Yeah.
how often they report it. Some companies report a little bit slower than others, some more often than others, and some won't report if you haven't used the line of credit for a while. So it's the best thing advice I would give is don't pay anything off beforehand. Right?
Hmm.
Let me see your credit. If we're in a good spot and we don't need to pay anything off, just leave it alone.
Exactly.
If we need to pay things off, I'll let you know which ones need to be paid off. I like to make sure I look at all the debts or all the lines of credits that need to be paid off, and determine which ones are going to be the most efficient ones to pay off.
Yes.
You know what I mean? Because I'll know, okay, if we pay $500, we're going to save $50 a month here. But if we pay $600, we're only going to save $30 a month here. You know what I mean? And so
That's right.
it's a matter of picking the right credits cards to pay off, or lines of credits, or even
Yes.
installment debts. You know what I mean? And
Agreed.
sometimes you don't even have to pay them off. Sometimes there are other tricks to kind of get around certain debts.
Agreed. And I appreciate you, providing that information, Daniel, because
Mm.
it is sometimes where, our clients want to be proactive and we appreciate that mindset,
Mm-hmm.
but definitely provide that information. Give us the list, show us what your ideas and what your thoughts are. And then what we
Mm-hmm.
can do is say, yes, yes, no, no, don't worry about this. Maybe this one, yes. And it's going to make you feel more at ease, a little bit more of a peace of mind to know that everything that you thought you needed to do probably is only one third of that list.
Yeah. Yeah. You don't want to go in blindsided, because people think that if they do certain things, you don't know how to calculate credit. There's nothing out there that tells you or gives you a formula as to, okay, if you do this, this happens. If that
Exactly.
happens, obviously, yeah, if you pay down debt, your credit score goes up if you have really high debt to income ratios. But that's not necessarily true for everybody, because sometimes your credit's just capped out where it is because of how long you've had your credit, or
Yep.
whatever other situations or factors that go into calculating that.
Definitely.
That said, so we'll go on to the next topic,
Mhm.
which happens quite often. It's revolving around your guys's employment situation, your income situation,
Yes.
right? So one of the things I have on here is changing jobs before looking for, or at least talking to me, or while
Yes.
talking to me. And I've had this happen with myself, and I've had this happen in our team many times, where people just randomly decide to go from one job to another.
Yes.
Right? And that's all fine and dandy under certain circumstances, but not all of the circumstances.
100%, Daniel. I mean, we're right now in an age where, going from one career to another, one job to another, it's common
Mm-hmm.
until it's time to do something
Yep.
with your life and you have to apply it. And then you realize maybe I should have waited. Maybe I should have discussed this. Maybe I should have found out what's going to affect me in the long run.
Mm-hmm.
Because, I believe in the long term, are going to be short term, goals that we have, but always think long term,
Yeah.
what's out there for you? What are you really working on? What's your goal?
Mm-hmm.
So that way you have a plan set that's going to successfully get you there. There's no, do not, say no to that promotion,
Mm-hmm.
but you want to be, again, very transparent, very open, not
Mm-hmm.
only with your lender, not only with your realtor, but also with your employer, with your boss, and just say, hey, look, I'm looking to be in the market of being a homeowner in this time frame.
Mm-hmm.
I want to take this position. Can you maybe hold it for me? Can we work something out? Something that's going to at least get you in line to know that it's not going to affect your qualifications. Now, maybe you can kind of speak about that. If maybe it is a promotion, maybe it doesn't hinder them too much.
Yeah. I think, again, not every circumstance
Mm-hmm.
is a dead deal. Promotion could be. It's going to depend on a few things, and I
Oh, I
got
like
some
what you're
notes
saying.
right here. Right.
Yes.
So let's start off with the main one. If you're changing jobs that changes your income,
Yes.
right, for the better, usually good.
Mm-hmm.
And I'm going to say usually, because there's always going to be circumstances that might screw things up, but usually good if you're getting a job that pays you more. It could pay you more, but you're taking on less hours. Is that necessarily good?
Right.
Maybe not, because what
Hmm.
if you're full-time for this job, but this job is variable hours,
Correct.
right? So what that does is it puts you in a position where you're getting paid in a different manner. In the long term, yes, you might qualify for more, but in the short term, we may have to pause
Yes.
because you've changed the way you're getting paid,
And
right?
that's one thing that I did understand is that,
Mm-hmm.
if you're if the way you're being, paid,
Mm-hmm.
if you go from a 9 to 5 job to potentially, something different, like a whole new field, let's say that
Mm-hmm.
you go into I don't know, self-employment, just to make it a really hard change,
Yeah.
it is now completely different. It's a game changer,
Yeah.
to where now you're going to have to maybe potentially requalify yourself from that new job career change.
Yeah. No, definitely. Because if you're going from that, even if it's in the same line of business, working for a company is a secured paycheck, right?
Correct.
Whereas being self-employed is not a secured paycheck,
Hmm.
right? There's when you're going to be self-employed, you're taking on a certain risk, right? And so the bank sees that as a risk.
Yes.
So in order for us to alleviate some of that risk, that's why usually when it comes to small business owners, we need 2 years history.
Yep.
And your tax returns are going to be really, really big and a key factor to determining how much you get qualified for. I'll definitely make a video on how to get small business owners qualified in the future. But as a small business owner, most businesses don't do too well in the first 2 to 3 years to begin with,
That's true.
right? So you're kind of pushing everything back, right? Which if you're going to try to be a homeowner and then go into a small business, I mean, you're going to make your own choices. It is a risk,
Hmm.
but consider the fact that you have more debt when you're doing stuff like that.
Yes.
Um, so just be very, very mindful about making sure you articulate that with your lender beforehand, right? The other thing is receiving new forms of pay,
Yes.
right? So when you're going from just getting paid hourly to now you're getting overtime. Um, Overtime, I can't use it unless you've had at least 1 to 2 years of history on it, right? Tips, same situation, right?
Yes.
Let's just say and I think we talked about this a little bit earlier, like going from part-time to full-time or full-time to part-time.
Hmm.
If you're going from, let's just say, full-time to getting paid by piecework or
Yep.
commissions only,
Yep.
um, there's another way you can get paid that, it's just going to be based on your productivity. Those things also put a hinder on
Absolutely.
when you can qualify, because again, those are what we consider variable income. So anything that's not 9 to 5, 40 hours flat or salary is considered variable income. Once you turn from standard salary to variable income, depending on the program, we might need 12 months, might need
Yes.
24 months.
And that's a great point right there. It is sometimes up to the program. The
Mm-hmm.
program's going to tell you this is your income max or this is your income minimum. Anything
Mm-hmm.
that shows in there, for you to understand that, sometimes making more money might disqualify you from a program.
Yeah.
That, so it depends. These are just all. There's so many programs that are out there. Not to say that some of them don't allow for you to be benefited by making more money. It just depends on what you came in with the thought process to begin with. Maybe you thought you were going to qualify for a very large down payment assistance program, and then you realize that they have their own, qualifications, and is usually on the lower end side.
Yeah. So the down payment assistance programs definitely have lower income limits. And that's a good point. If you're changing from one job into a job that's going to pay you more, if I have to go based on projected income, and if that's going to be the case, that could disqualify you from a program, right?
Hmm.
We could be working on a first-time homebuyer program right now, and you're on the edge
Yes,
of
on
the
the
down
cusp.
payment
Yep.
assistance program, and then all of a sudden you make this one change, even getting a raise
Yes.
can significantly
Mhm.
change whether or not you're going to get that program. So, excuse me. So, talking about these things beforehand, or letting your agents know or the people you're working with know beforehand, is really going to be key, because timing all that's going to be really important
Yes.
too. How we work around that, maybe we can talk about different programs, that way we don't get caught off guard,
Mhm.
or just to be safe. You know what I mean? So it's really, again, anytime we have these conversations, it's always good for us to be transparent with you, but it's also a must for you to be transparent with us.
100%, because that's
Mm-hmm.
where it's at. I'm sure that when you speak with Daniel, he's going to give you options, and the options are good.
Mm-hmm.
Options are plan A, B, C through Z, just to say maybe if the first one didn't pan out, these other ones can still work for you. So don't feel discouraged of any changes. Just know that when you're working with a professional that's qualified and has credibility to be able to answer just about every question you have, Daniel's going to be able to let you know these are the potential options that you have.
Yep.
So that way you understand that we're here for you.
Yep. So just again, transparency. We're all on the same team. And I said this in the last podcast. We're on the same team. You're on the same team with me. I'm on the same team with Asael.
I'm your team member.
We're here in a team. Our processors on the same team. We're all here
Yes.
to make sure we get from point A to point Z and we get you to the closing table. So
Absolutely.
just treat us like family, I guess, right?
100%.
And then the other one, speaking of treating us like family, that was a good segue.
Definitely.
Going from not working for family members to working for family members, that will definitely hurt you. We've had that happen in our branch a couple times where I've noticed people go from that to that, and it is such a pain in the butt to go through. But I will say this, certain programs will only accept family member employment if you've been there for 2 years, because they have to have the tax returns to prove that you've been working there for 2 years, because anybody could say they're going to go work for a family member and then a family member, try to help somebody out.
Yep.
Right. And even getting a promotion within the same from a family member, because that can also look as if they're trying to, what's the word I'm looking for, inflate their income.
Yes, you're
fabricate.
Correct. And so there are those instances where, everyone wants to be doing things in the right intent. Sometimes it comes down that, it might look like a red flag. It might look like there's some sort of, favoritism there, where we're trying to make you look like an even better qualified candidate. And then you realize, oh, I shouldn't have done that.
Yep.
So there's that.
Yeah, and I'll give you an example that I have right now. I have one of my buddies. He was a real estate agent out here. He actually moved out to California, and I'm helping him with this loan.
Awesome.
He moved out there to help family out with business. And he just recently did exactly this. He went from working in the company to getting promoted, and now he's just got a big raise, even though I had kind of told him, like, are you sure you're going to do this? He's like, yeah, we're doing this. But he was actually doing it for an actual reason, right? Me and him, we'll talk every once in a while, and I can tell you this, he wasn't lying. So there are ways to kind of work around some of these things. There are circumstances that would be helpful to make it a plausible fight for me when it comes to the underwriter. But again, being transparent was the key thing here, right? I already knew it was kind of coming. I was able to prepare my team and my processor and underwriters for what was to come. And we were able to kind of look up how we can do it, what we needed from them. And we basically had everything we already needed. We just needed to wait till we got the paychecks and stuff.
Fantastic, Daniel. And of course, if anybody out there who's currently listening to us discuss these topics, if you don't know what the underwriting process is, it's really where we're trying to explain your story to them, isn't that right? And just to make sure everything clears.
Yep. And that's why you have the team like us. Like when it comes to the real estate side, Asael and his team on that side are there to make sure that everything that's kind of going on with the process of reviewing, inspecting the home and all those things, the contract when it comes to purchasing home, making sure that all that stuff is getting taken care of, being resolved, and having somebody to talk to that can advise you on what your next steps could be, how to deal with certain situations. I know I did a video before on the underwriting process, but the underwriting process in short is me and my processor and my LOAs and all of us. What we're trying to do as your support team is make sure that your file is going to the underwriter as clean as a whistle as it can, so that way they have less questions, and the less questions they have, the smoother the transaction goes. You know what I mean? The underwriter is there to also close the loan, but they are the ones that need to make sure that this is going to be passing any kind of quality, what's the word I'm looking for, when audit. You know what I mean? So it's a good idea to still be transparent. You know what I mean? I'll give you guys the best advice I can and tell you guys what we need to do to make it look as clean as possible when it comes to doing your home loan. So
100%.
Yeah. So the next part though,
yes,
now that we got to business over, is quitting your job.
Oh no. Don't do that.
Or getting fired.
Yeah.
Whichever one you want to consider. But the last thing you guys want to do, guys, is quit your job. That kind of goes hand in hand with the previous one where you're changing positions and stuff like that. But people have done it. Just because you qualified for a loan does not mean you should just quit right away.
Yes, if that is your game plan, where you're saying, man, I can't wait to, let go of this job, I'm just going to go and become a homeowner, put in your 2 weeks a little on the other side of things, so that way you're closer to, you're closed, and then you can say sayonara, but not before, not during.
Don't tell me nothing like that.
Do not mention those words. Just stay
You're just
committed, stay
you're
patient.
trying to get me in trouble. I would say don't quit your job. You guys got a new debt. You get like just kind of the other thing, like when you're co-signing, you're taking on a new debt. Home mortgages aren't necessarily cheap, not these days at
That's
least,
correct.
with home prices being up and interest rates being the
Hmm.
way they are. So it's really important that you don't quit your job. I try not to get fired. I understand that there are circumstances that are beyond your control when it comes to it, but do your best.
And
You
the
know what I
way
mean?
Daniel's saying it is there is a big responsibility that
Mm-hmm.
comes with a decision to want to become a homeowner.
Mm-hmm.
You do have to now consider, well, where are you in the process of your own life? Are you in a good mindset to be able to take on what's going to be asked of you? And
Yeah.
sometimes you are pretty much on the edge of wanting to change careers or quit instantly. You want to probably reevaluate what you're trying to do and what you're trying to accomplish, because you need to hold on and you need to do what is necessary to get you to your goal. And sometimes it's going to probably be where you're going to have to maybe, go out through the mountains, yell one out and say, I got this, because you want to get to
Yeah.
point A to point B. You have to be
Yeah.
able to know what it takes to get to your goal.
Yeah, I think you need to have both feet on the ground, even if
Absolutely.
it's just your toes. It's, don't go floating and trying to get into a mortgage that's going to be difficult to pay
Yeah,
afterwards. You
yes,
know what I mean?
yes,
Because foreclosure is, excuse my language, a pain in the butt, man.
yes,
But
yes.
don't do that. So yeah, don't quit your job.
Hmm.
Don't get fired. There are certain circumstances that are beyond your control. I understand, and I'm not worried about stuff like that. But with the intention to
Correct.
is kind of what I'm kind of getting at
Yep,
there.
yep.
And then the final thing is we talked a little bit about it earlier,
Hmm.
and that's for business owners, right?
Yes.
Owning your own business is probably going to be rewarding for a lot of people because owning your own business means you're your own boss. You're probably doing something you're passionate about. Maybe you're just doing something that makes you a lot of money, and that's what pushes you forward to
Yes.
do that thing, right? So um, don't go from running, or working a regular job to a business owner or even a 1099 employee.
Hmm.
Because essentially, a 1099 employee, you're basically self employed.
Yes.
Um, if you're going to do that stuff, be mindful that you're going to have to put a pause on your purchase. But not only that,
Hmm.
your tax returns are going to be really, really important.
They are going to be very important. For anyone out there that wants to just a little bit of a background on what it'll take to be self-employed or own a business, is that you're going to have a lot of expenses,
Yep.
and those expenses, again, if your plan is to get your business up and running, it's okay. You're going to probably have a couple of years where you're either under or coming out even.
Yeah.
But here's the thing: when you're wanting to eventually become a homeowner, they're going to want to see that you're actually making money.
Yeah.
So there's going to be things you have to take into consideration. What's a tax write-off, and why? Why do you need to show that you're making money?
Yeah.
And it's because it's a risk that the bank's taking, and they want to know
Yeah.
that that you're going to be able to pay this off,
The
or
key,
make payments on time.
yeah, the key thing to a approval on a loan is ability to repay, right? We're looking at your ability to repay this loan. Are you gonna be able to make this payment along with your other payments? Um, like Asael said, owning a business or running your own business does come with a lot of expenses. I think you can relate that to anything we do. Like for me, and for the type of business or the type of profession we're in is very
Yes.
similar to it. Right? There
Yes.
are a lot of expenses. There's going to be moments where maybe you didn't work hard, so you're not going to make any money. You know what I
Correct.
mean? Or maybe the economy or something else is slowing it down. Whatever the case may be, we need to make sure that we're on top of our stuff to make money with our businesses. But at the same time, for like Asael, since you guys still do that same thing,
Hmm.
because you're a business owner, you want to take advantage of certain things.
Absolutely, there are advantages to being a business owner,
Yeah.
especially when it comes to your taxes.
Yeah.
But then, of course, right, what is your game plan? And
Yeah.
sometimes it is, yes, I want to make sure that I expense everything that I'm qualified to expense.
Yeah.
And there are times where you say, hey, work a little bit more harder so that way you can show that you're, in the black and not in the red.
Yeah. And the thing about the taxes is we're going to be looking at your AGI, your adjusted gross income.
Hmm.
So anything you write off is going to take away from what you've made that year. There
Correct.
are certain exceptions and stuff like that, which I won't get into in this video, but just roll of thumb. Let's just say you made 100,000 net
Hmm.
and then you wrote off
You see,
$80,000.
that means you only made what,
$20,000. And what is
Exactly.
$20,000 in a year? You're probably making $1,833 or $1,633 a month. What does that get you for a mortgage? If you're doing 50% or less, an $800 mortgage, that is absolutely impossible.
You're not in the market. Yes.
Not unless you're putting the biggest down payment in the world and you're getting a
Yes.
$50,000 loan in today's market. So when you're thinking about becoming a business owner, make sure you plan on these things ahead. If buying a house is one of those things, and maybe maybe the business comes first for you, and that's perfectly fine because that's what you want to do, and that's your end game to
Yep.
being successful in the future. And by all means, do that. You know what I mean? Follow your heart, follow whatever your dreams are. But I'm just letting you know here in this video what could potentially set back your goals if buying a home is also your goal.
Correct. Always have a plan.
Always have a plan.
Always have a plan.
Always have a plan, guys.
Mhm.
I don't go over that a lot, but no, I do say that a lot. Always have a plan, even if it's for your credit. But yeah, overall, guys, I've been in the business for, I'm gonna say 4 years this year.
Awesome.
And
Congratulations.
thanks, man.
Yeah, for sure.
And I have seen a lot of different circumstances, a lot of them related to these things that have really disappointed a lot of clients, potential clients, because they were unable to purchase the price they wanted, or unable to get a home, or maybe it affected their credit. Now they can't do certain programs.
Yep.
Whatever the case may be, it's just take these things as notes to, maybe you should talk to an agent, like we always talk about, before doing anything.
Yes.
You're not obligated to do anything right away. The whole point of even talking to a lender most of the time is going to be to set up a plan. If you're already there, and if what we tell you that you qualify for then and now is good enough for you, and it's going to get you into a home, and you're motivated to do it, then do it. If you're one of those buyers that are patient and just want to take the slow ride, in a sense, I've had clients take 1.5 years to get into a home.
Awesome.
You know what I mean?
Yeah.
It's just a matter of how fast you want to do things. For me, I don't care how long you take. I'm just here to make sure that you understand what you need to do, how to get there, and that's it. Once we're done with everything and you're ready to close, congratulations, but I'm not going anywhere. So if you're willing to take 3 minutes to 3 years to purchase a home, let's do it. So,
and I'm with you on that, Daniel. It is going to be always your personal journey. And we are here. We're honored to want to be able to be considered for the opportunity of being within that journey to guide you in the right direction. And no one's story is the same. It doesn't matter how close you think your story is to somebody else's. It's always yours. It's always unique, and it's always that important. Every story is valuable. So just make sure that you're always being open with us, being honest with your questions. The more questions, the more we'll understand your story. We'll understand how to put together a plan that's going to be successful for you. You don't want to, once you're ready, you want to basically, I would say, turn off all of the outside noise.
Yeah,
you just want to
absolutely.
turn it all off and just start asking the right questions to the right professionals like Daniel, so that way we are able to just focus on you, because the most important thing is that we want you to focus on you as well. It is going to be more, I guess you can say, liberating. You're going to be more fulfilled knowing that you did everything that you could possibly do within your control to help you get to where you want to. And our responsibility to you is to help you fulfill that dream, fulfill that goal.
Yeah, absolutely. But with that said, I think we've touched on everything we needed to.
Yes.
So I hope you guys found this information useful. If you are looking to purchase a home in the future and have some questions for us, please feel free to reach out to us at any point. If you know anybody or know anybody else like that's looking to purchase a home anytime soon, please share this information with them. Comment any questions you guys might have. I'll be more than willing to create videos on any questions you guys feel you want answered sometime soon. If you want to follow me, you guys can follow me here on YouTube. You can follow me on any of the platforms this podcast is in. You can also follow me on TikTok and Instagram. And where can they find you, Asael?
Oh, thank you, Daniel. For me, same thing. I'm pretty much on all social media online. You can follow me. If I can give out my handle, it's SirAsael Junior. So that's SirAsaelJunior. So if you find me, type that in, you'll see all of my accounts.
SirAsael Junior. That is, guys. So I hope you guys have a wonderful day, and thank you guys for tuning in.